Welcome to the Bitcoin Business Podcast hosted by Sovereign. I am the individual hosting the podcast, Brandon Karpeles, aka Plebeianon Noster. With me today is a gentleman I've had the pleasure of meeting over our journeys in Bitcoin, a very similar career to mine, a lot of time in TradFi, and then decided, hey, I got to go do something in Bitcoin and do it on my own. And um, with me is Scott Marmoll and of Capital B Advisory. And thanks for joining us today, Scott. As we've been talking and getting to know each other over the last sort of year or so, it's been cool to see sort of the transformation of of you in your professional career. It was very similar to mine, and the classic you can just go do things is so true in this space. So, Scott, why don't you tell us a little bit about your background, where you came from, how you were in TradFi, and sort of became not necessarily disillusioned, but hey, this Bitcoin thing is the most important thing when it comes to finance, and I'm going to go out and
Yeah.
do something
Yeah,
on my own.
absolutely. Well, thanks for having me. It's great to be on, and have likewise gotten to know you and enjoyed it. And it's always nice. There's very few of us, as I think you probably know, which is sort of traditional finance experience set and true Bitcoiner. To the extent that that exists. Um, so my whole career has been
There are dozens
yeah,
of
yeah,
us.
dozens, right? And it sort of makes sense if you think about it, right? Because if the system as it currently exists is the one that benefits you, and you work in that finance world in that structure, coming to understand Bitcoin is almost impossible because you have to kind of accept that what you're working on, or the system that gives you a job, maybe isn't for long for this world. And so luckily, I think, I'm not sure how you accomplished it. For me, it was that I came to understand Bitcoin as my career started, and so I was studying Bitcoin while I was studying M&A, and stayed in M&A throughout my whole career, at least so far, because it was the place where I could learn the fastest. And despite having my own opinions about a debt-based economy, raising capital and selling businesses and buying businesses is great work and experience, to where you can kind of understand all the aspects of a business pretty quickly. So for my whole career, I've kind of done M&A and capital raising work from the sell side perspective, working on behalf of the would-be seller or business that is going to raise capital. I've sat in a private equity role where I was buying the businesses. I've done it most recently as a vice president at Cantor Fitzgerald, helping them build out a middle market sort of private business offering to offer M&A advisory and capital raising work for the kind of 50 to $500 million enterprise value business. And I was helping build that out of Charlotte and Dallas. And I've rewind to Nashville in 2024. I'm walking around the conference, taking a sick day, and kind of being the hobbyist Bitcoiner. And Howard Lutnick is on stage talking about how Cantor is very focused on Bitcoin and crypto. Only half of that was exciting to me, the Bitcoin piece. So from then on, I sort of internally tried to push, hey, put me on the Bitcoin team stuff. And I think part of what developed is I developed a pretty strong thesis that there are, what today and maybe going forward, going to be even more business owners who are coming to understand Bitcoin. And just like the individual has a very like common and predictable sort of hero's journey from no coiner to sort of laser-eyed Bitcoiner, the business life cycle has, or the business owner has a similar sort of hero's journey, but it has specific implications for the business. And that first stage of it is, and I think this is where you guys are building an awesome practice in helping businesses start stacking sats, right? And doing it the right way with the right service providers, the right custody setup. That's kind of stage one of four in my mind. And the next is like, okay, we're maybe 2 years into that trade, you start just piling all of your cash into Bitcoin, and the business starts to think about investment decisions from a different perspective. The next one is, well, maybe we should take on some debt. And I think this is how you and I originally connected. We were talking about this because you have overseen quite a bit of sort of debt, institutional debt transactions in your TradFi career. And I think this immediately resonated with you. Like you explained the trade, which is if you can borrow money from a bank or a direct lender at low cost and low amortization, and you can use it to either directly or indirectly put Bitcoin on the balance sheet. Well, that's an interesting trade. That's kind of Michael Saylor-ish, but in a way that might be a single time type of transaction, but also sustainable. If the cash flows of the business can service that debt. So I think of that as like sort of step two on that journey. The third is, well, maybe I should sell some equity in my business, right? Raise more capital, take some chips off the table, and then this becomes more of an individual kind of stacking strategy because those funds usually come out of the business. But either way, it's that business owner thinking about, well, I want to get further along Bitcoin, and I start to look at the business and say, well, I don't want to have all my eggs in this basket. And then the final stop, 10 years into your Bitcoin journey as a business owner, you're looking at the value of your business, and the fiat world is valuing it on metrics that I think we all agree are kind of broken. But it's kind of to the benefit of the owner, right? So, your typical business is worth more than its cash flows at a 40% discount rate. And since Bitcoin probably does a 40 to 60% CAGR for the foreseeable future, you say, okay, well, if my business is let's just use easy numbers, $100 million business and has $15 million of cash flow, well, that's a 15% growing asset. Well, Bitcoin's a 40 to 60. So this is the final stage is you start to, as a business owner, look at your business and go, I don't think this is a good investment at all. And so that's that final stage where you say, I want to sell the whole thing. And now I don't expect that today there are lots of folks that have said, you know what, you're right. I should sell my entire business and go to the beach. And some people like their job that is running their business. But the point being that this whole sort of hero's journey for the Bitcoin business owner is something that there is no service providers kind of handling any parts of that. And you guys are really doing a great job building out the first kind of stage and a half of that. And I think my space in there is probably stages 2 through 4. And I think we'll get into this, but the one side quest that happens along that 4 stages is I want to become a Bitcoin treasury company. And uh, I'm not sure anybody knows what they mean when they say that. But it's really alchemy, and I think it's a distraction if you're trying to kind of turn one unit of value into 10 units of value in the short term. The ways that happens are usually not sustainable. But stacking Bitcoin, leveraging your business, carefully, taking on institutional capital, these are things that can grow the Bitcoin value for yourself individually and for the business. So anyway, that was a long-winded way to say I started Capital B Advisory to serve that kind of M&A and capital raising advisory work for businesses in the private market owned by Bitcoiners. So I've always done this sort of work. I want to do it with Bitcoiners so that I get to work with Bitcoiners all day and not just talk to them from 5 to 9, but now talk about Bitcoin with Bitcoiners from 9 to 5 as well. So I stepped out a little under a month ago, and it's been really great to see how it's been received. I think there is appetite for this sort of work, and when you call a Wall Street investment bank and say, "Hey, I want some advice on bringing Bitcoin into the sort of strategy for my business," that there's crickets on the other end of the line. So huge market opportunity. It's great for both of us to run unopposed because there's no competition for these services, which tells you how early we are.
I mean, I mean, you hit on such an important point there, which is that yeah, you look at these M&A deals or whatever, and the companies, okay, there's a cash flow of 15%. Well, I'm not going to put my money into this business. Well, what if their balance sheet was stocked with all the profits from the last
Right.
10 years that they've been rolling into Bitcoin? Now, all of a sudden, you have the balance sheet of the company that's actually experienced the CAGR of Bitcoin. So you have the net worth that's accrued in the company And now you have a cash flowing business where you're sitting there as a potential buyer going, I know I can now continue to roll these profits into Bitcoin. And like that is there's been so much focus on the income statement and the cash flow and can you service the debt? And the reason people focus on that was is because of something you mentioned earlier, which is like how much debt can you take out, to responsibly service can that can be responsibly serviced. And I mean, I saw this all the time in my former life. People looking at companies, it's like, well, how much can we lever it up, and how do we get to exactly 1.2 debt service coverage so that the bank will approve our loan? And it's like that is such a terrible way to look at everything. And to be fair, there was the underwriters and people, they did look at the balance sheet, and that did have some weight. But at the end of the day, I remember sort of towards the end of my time there. I mean, we were doing crazy cash flow deals, no collateral, absolutely zero. Everything was done on basically a cash flow analysis in EV, they called it enterprise
Right.
value analysis of these businesses. And we would have a meeting once, I forget if it was once a month or once a quarter, and we would go through all these deals in our portfolio that had no collateral under them, or nominal. There's a $40 million loan and they got $3 million of
Right.
receivables or something. It's all reliant on this cash flow. And we would go through these businesses, and like the methodology for the valuation of these companies was so preposterous. I mean, it was. I mean, you talk about just making stuff up out of thin air. I mean, I remember sitting there with my boss. We'd be texting each other. We'd be like, "This is all made. None of this is real. This is all, Oh, and then we're projecting an increase of EBITDA to this number, and if this happens, then that." It was all just
I
total
remember.
nonsense. And
Do
then
you
it was
remember
like,
EBITDA right after COVID kind of came around?
oh yeah,
You
oh,
went from EBITDA, which is this adjusted earnings proxy for free cash flow that's already so removed from reality, and you added C to it, which was just a magical adjustment for coronavirus, which said, okay, we didn't actually make any money over the last 12 months, but if you adjusted for COVID never happening, we did great, and banks were underwriting it.
we had. Oh, we had a few folks in our office with that mug. It just said
Yeah, yeah.
EBITDA on it, and there was no explanation or anything, but everyone in the office knew exactly what that mug meant. And yeah, it's like, well, you just add back the COVID stimulus. It's like, well, but those aren't earnings. Those aren't, that they were actually negative cash flow without the
And I
stimulus.
think
And
it's
it's like,
important to
oh well,
clarify
yeah,
though, like the
yeah,
leverage piece is not, so there's leverage is a tool, just like a gun. You can use it to free an enslaved humanity, and you can also use it to shoot yourself in the foot. I think leverage on a fiat standard is a balance sheet with nothing else in there. Leverage on a Bitcoin standard is a balance sheet that is um, augmenting the growth of the business by using the TradFi fiat capital markets to pull forward Bitcoin accumulation, using tomorrow's cash flows with a loan today to acquire Bitcoin at today's prices. Done responsibly, I think there's something there, and I'm sure you find this. And in the private markets, founder owner businesses are usually under levered. And when they go and hear what, a private equity fund might pay for their business, they're floored. And it's because they don't realize they could have done half of that in their own on their own by taking leverage out with a bank or with a direct lender. Uh, to use those proceeds to put Bitcoin on the balance sheet is a completely novel sort of concept. But I think it's really compelling. And I've been having conversations with the direct lender community, the private credit funds, and I think they're starting to wrap their head around it. You don't really have to love Bitcoin to see the trade. It's like, hey, instead of underwriting a dividend recap where the cash goes out of the business, this is net better, right? The cash stays in the company on the balance sheet. It's recourse against your cash flow loan. And okay, maybe you don't like Bitcoin, then underwrite that it goes down 50%. It's still better than buying the owner a yacht, which you can't repossess if the loan goes sideways on the business. So,
oh, gosh,
go
this
ahead.
is, yeah, that is such an important point. I mean, that's ultimately, I kind of went on a tangent, harkening back to my old days, that's the exact point. You had these, VCs, vulture capital, as some people like to call them, that would come in, and then to your point, just lever up these companies, and then they would take all the money out themselves, and it's like, well, what if you use that leverage, and then you had a one for one? Uh, first of all, they would go in, they would way over lever these things. And listen, if the bankers are going to give them the money, the bankers are going
Right.
to give them the money, whatever. Like, take your $10 million bonus next year and, buy your yacht. Like, that's, some of that is on the lenders, and if there's a market for it, so be it. But it creates it, as with everything with fiat, it created all these perverse incentives, and your incentive was to rip the money out of the company ASAP, and because you didn't know how long it was going to be in there. Get yours now, and then now you personally, you understand fiat's a melting ice cube. So now you're going to go invest it personally in something that's going to hold its value better than
Right.
fiat. And to that point, what if you can get a increase your liability but increase your asset by the same thing, and keep that on the balance sheet, and then you, as a founder, or not a founder, excuse me, a fund participant or manager of a fund or whatever, now you can lower your time preference and say, hey, if I'm willing to stick around with this business and let it succeed for 5 years with the Bitcoin I bought, now I'm going to 10x my returns, or 100x my returns, that I would have, as opposed to just doing a way too high a dividend recap, ripping all the money out, and, quote unquote, winning for today,
Right. I mean,
even though you destroyed
it's it's
people's livelihoods and
it's
wrecked
the
your company.
same. It's the same, or it's a similar concept as we've seen in the industrial economy of America be hollowed out by the sort of dilemma of being the world reserve currency. The fiat incentives drive the hollowing out of the business balance sheet in the same way, because the best use of capital, all the best uses of capital, pay down debt and distribute cash after growth is kind of no longer a reinvestment strategy. Those are ways where capital leaves the balance sheet. And I think Saylor talked about this. There's this new trend, which is recapitalizing the balance sheet, and building a Bitcoin war chest. There's questions around, like, well, isn't it trapped behind a tax wall? Maybe yes, but also I think if you're careful with how Bitcoin is used as collateral, you may never actually need the tax wall to come down. But it's interesting to think about that trend changing now that the incentive for folks who come to understand Bitcoin is to recapitalize their balance sheet. And I think we live in this really special period of time where you can borrow fiat and use it to acquire Bitcoin. On the individual side, there's not a huge ability to do this. Personal loans are certainly far out the risk curve. But for institutions, businesses kind of 2 million of EBITDA and higher, particularly at five, and definitely at 20 plus of EBITDA, the market gets really deep for borrowing fiat at attractive. When I say attractive, I don't necessarily mean very cheap cost of capital. It's not going to be 4% interest. But if it's 1% amortization, that's really flexible money. It's almost like a Bitcoin-backed loan that's interest only, right? And so in that way, there's an interesting trade that I think will come to be. The question is just what business owner is still owns their business, but is so high conviction that they'll use that private debt sort of trade to get more Bitcoin. Because remember, stop four along that journey is just sell your business. So if you're that convicted, you might not say, "Oh, I want to, take some of Carlisle's money to accumulate Bitcoin on my balance sheet. I'd rather just sell my business to the equity fund over here at Carlisle, and just take my Bitcoin and go home." But yeah, a positive trend, lots of positive trends from Bitcoin, and one being the sort of remonetization or recapitalization of the balance sheet. And then it grows and gives people optionality, right? In the same way it does in our personal lives. You save in Bitcoin and focus on your craft, your optionalities and your freedom of your time grows exponentially along with the price of Bitcoin. So too is this sort of optionality in a Bitcoin treasury. You stack Bitcoin as a company for a few years, and you're getting your butt kicked by a competitor who's twice your size, well, all of a sudden you have enough cash to just buy them. Okay, great. Well, that was never available to you if it weren't for the growth of Bitcoin in your cash flow. So, the 1031 portfolio talks about this a lot. They have several of their investments, I believe, that are worth, or that the Bitcoin on the balance sheet is worth more than any amount they've ever raised externally. Which means that just the growth in the Bitcoin in a venture stage business has basically given them unlimited runway. I mean, what a cool concept versus venture capital in its traditional sense is you raise and you burn and you raise and you burn and you raise and you burn until you get to Uber's size, and then maybe you turn a profit.
Well, I mean, think about most of us Bitcoiners on a personal level. Like our Bitcoin is worth more than we've ever earned in our life. It's the same
Right.
concept, right? Because we've been saving in Bitcoin, and if you've been in it long enough, like the increases in the value of the purchasing power of Bitcoin have outpaced your earnings, and it's no different for businesses. It's the same thing, in that now you're in a position where you've actually by by capitalizing your balance sheet with Bitcoin, you've actually earned more than you ever could as a business by taking now. If you didn't have the business, you wouldn't have been able to acquire the Bitcoin, so you need the business, and that's the value proposition here. But I one thing I was thinking of, it just came to me that as we were talking about these VCs coming in and leveraging companies and taking money out today, and it actually will be beneficial for them to lever today and hold Bitcoin on the balance sheet because you're going to get a greater payoff than just strip mining the company today. I actually think that because of Bitcoin's volatility, it's actually going to if and when people decide to go this route and figure this out, it will actually instill more discipline in the people borrow. It's going to require you to borrow more
Yeah.
conservatively. You will have to realize that, okay, this thing could wick down at any moment. Um, if we have a 70% drawdown, you're going to take on much less leverage than you would have otherwise, and then store it in the company because you don't want to get liquidated. And I never really thought about this before, but it's almost like a forcing function of um, making uh, VC funds and hedge fund managers and stuff take on less leverage to have a better opportunity to make more money
Right.
in the future, because the tail risk of liquidation basically negates the entire value proposition of capitalizing the business with Bitcoin
Yeah,
via debt.
there's a bunch of stories in the consumer retail space where private equity came in over the past 20 years and just, like you said, strip mined the business. And then it ends up in bankruptcy. And the why does it end up in bankruptcy? Well, because the private equity investor has already taken out many multiples of their initial investment. And so there's this moral hazard of like the balance sheet isn't a valuable thing that they're worried about preserving. They're trying to get one more dividend recap out before the thing goes sideways. And this, especially in consumer retail, this happens a lot. I mean, name a multi-site retail brand from 20 years ago that survived that isn't one of the top five, right? A very famous one that comes to mind is Toys R Us. And on a Bitcoin standard, you've got the opposite, which is this responsibility comes with, okay, the business is stacking Bitcoin. Now the balance sheet is the return profile for the investor. So they have a much stronger incentive to be responsible with that balance sheet and with the leverage that they put on it. You mentioned something about kind of like the value in the exit then being mostly from the Bitcoin. It's funny, it dawned on me when you said that this isn't going to be an entirely new concept to the private sort of M&A markets. Uh, Talk to a sell side investment banker in the sort of size of deals that I've worked on. Almost all of them has a story about a business owner who sold the real estate separate from the operating company and made more on the real estate than they will ever make on the operating company. Not an uncommon concept. There's a business here in town that was bought by a private equity fund here in town, and they have some really choice real estate where they make baked goods. really choice real estate in the heart of Charlotte, and the family made, I believe, way more money on the real estate than they made on selling the operating company. And that's the same concept as what we're describing, and it's because it's the same type of asset. It's a hard asset, right? Real estate. Now, Bitcoin is the hardest asset and has a bunch of advantages over real estate from a cost of management perspective, and and all the other sort of factors that go into that: scarcity, fungibility. It's liquid. It trades 24/7. But it's funny, like this won't be an entirely new phenomenon, and we can explain it to the TradFi community by saying, look, you've heard about a real estate piece of a business being worth more than the whole operating company. This is where we're heading on a Bitcoin standard, which is you just stack the hardest asset with the cash flows. And yeah, I mean, if real estate was as liquid and fungible as Bitcoin, then lots of entrepreneurs would be stacking real estate in their treasury. So, this comes back to the sort of the market economy for what money is. It's the most saleable good, and Bitcoin's perfect for it. So I think it'll be interesting to watch that play out over the next decade.
In my former life, I got out of a lot of hairy deals because of the equity
Yep.
in the real estate, whether that was via sale, leaseback, or just a straight liquidation of the thing, and we're going to downsize the facility, and then you get to recapitalize the balance sheet, and it's funny because at that moment in time, it's like, okay, now we have this windfall of cash. Well, we're going to pay down all the debt, and well, what if it was like, hey, we could pay down half the debt, we still now we cash flow at 1.8 times or something. We're very comfortable, and we recapitalize the balance sheet with Bitcoin, um, and via a sale leaseback. You underwrite the deal to the new cash flow from the lease agreement, plus the
Right.
debt service, and it's like the whole thing looks completely different. And yeah, I mean or many times we would get into a troubled situation, and it's like, well, they have this unencumbered piece of real estate, or they've got with some other lender, they have like a 25% loan to value on this piece of real estate. Like, okay, we're not going to lend like a working capital facility necessarily against the remaining equity in the building, but we can take it as collateral. And now all of a sudden we feel a lot better that, maybe we're a lot higher on you know, our asset-based facility than we want to be, as well. So, I mean, that was incredibly common, was to bolster credit facilities with
This is where what
real
Andrew
estate,
Hunt
and
is
to
doing
get out of
is
deals.
really
Yeah.
interesting. Andrew Hunt and team at
Yep.
Battery, kind of fusing Bitcoin into credit facilities. I think the it's interesting right now, sort of, okay, you find a Bitcoiner that wants to do that sort of trade and borrow against their hard asset and also fuse Bitcoin to that credit. But I would think we'll fast forward to a world at some point where the lender is doing it kind of without not without permission, but kind of forcing it on the borrower, saying, "Hey, look, like if you want us to underwrite this deal, we need to have 10% of the proceeds go into Bitcoin, and we'll share in the upside, and it'll be locked up." I think what Andrew is sort of ideating starts with Bitcoiners as the borrowers, and Bitcoiner real estate folks as the borrowers, but I think it ends with like every lender demanding some portion of their collateral package being Bitcoin. Now, how long does that take to play out? I don't know, but it's super interesting.
It's going to have to be, because listen, we always make fun of the bondholders, and all of them, they're getting crushed by real inflation. Well, guess what? Guess who else gets crushed by real inflation?
Yep.
Lenders, because inflation's 8%, and your fixed rate real estate loan is 6.5%. Well, you're losing 1.5% every year. Well, now what if you could all of a sudden add something? And listen, do not play your world's smallest violin for the banks, because they just print more money to paper over their own losses. And we all know about fractional reserve lending and how the whole system works, and how they keep themselves afloat by making more and more dollars available to
What do you
everyone.
make of
Uh,
that
it,
concept? Like apply that staying alive model to micro strategy selling preferreds. I don't know what to make of it. I mean, I get the concept, um, but it doesn't, to me. reflect a logical long-term premium to the net asset value for the common equity. And and if it does, it probably shakes out to be like similar to what banks trade at, which is less than two, right? But to your point, like, what does a bank do to get out of those problems? Well, it borrows and play out, and it, the stated goal of these preferreds, the strategy is to continue to issue them. And at some point in a bear market, that
Oh, hold on. Just to be clear, the bank lends its way out.
yes,
It
the
finds
right,
borrowers to,
right.
yeah, yeah, yeah.
But applying this concept, kind of the other side of it to strategy, it has these dividends that it owes on the preferreds, and it can suspend them at any time, but that would be the end of those offerings forever, because if you suspend the dividend, then you'll never sell another one. And so for now, every time you need more cash to do that, you either sell Bitcoin, sell common stock, or raise more preferreds. Right now, the market's open, so you raise more preferreds. At some point, there will be in a bear market, and there won't be a deep market for more preferreds. Then you have to either sell common stock or sell Bitcoin, or suspend the dividend. And any one of those three is really bearish for the common stockholder, and for the preferred holder. And I don't know what to make of it. I think that the idea that there are like tranches of risk that you could peel out on Bitcoin makes a ton of sense. But I thought, if I asked myself what this was going to look like a few years ago, I thought it was going to look more like what Pierre Richard is working on, like the Bitcoin bond company, right? Like, and this is your world, right? A securitization on top of Bitcoin as the collateral. You want the senior piece, okay? Then you get 10% guaranteed. You want the junior piece, well then you've got levered exposure to Bitcoin, and it would trade as a security. It's interesting how it's come to be, and I just don't know what it's going to look like in a bear market.
Yeah, I mean, I think strategy is very different on this because they have such low leverage. I think they're like 13% levered or something like that. It's like 7.7 to 1 or something like that. So in my opinion, MicroStrategy is going to be just fine. But yes, they're going to have to make a decision if we have some sort of protracted bear market. They do have an operating business under them too, which is a huge benefit because they do have cash flow from other sources, so they can supplement those payments for a period of time from the actual business operations. Now the question becomes, if the preferreds get so big that all of a sudden you have this massive coupon payment and you're really relying on the appreciation of the Bitcoin, I mean, I think you almost get to a point where if they keep it small like this and it's a nominal portion of the balance sheet, then it's not a big deal. They
Yep.
can service it. They have other operating cash flow. They can borrow against their Bitcoin, blah, 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 blah. At a lesser rate. That's more interest expense, but they can keep doing that for a very long time through a bear market very easily at 13% leverage. I don't think that's going to be a problem. Where it would become starts to become an issue is if it becomes such a significant portion of the balance sheet that you're no longer, and then obviously as you in a bear market, that's going to be terrible for the stock price, so you're just going to have negative pressure on the stock price. You're probably not going to be able to raise a ton of equity um, in the markets, dumping your common stock back, diluting the other shareholders, dumping it back out on the market. So that's going to be a difficult sell. You would What I think they would need to do is just basically make an announcement that, hey, we're going to have a structured liquidation of some Bitcoin here. That it and it almost you almost want to preempt it. Like, you almost want to go out, and if you get to a point where you're seeing your preferreds are becoming too much. Now, I personally am of the belief that the people currently at strategy are smart enough that they're not going to run into this situation, that they are going to keep the leverage low enough that they aren't going to get over their skis. And I think the team is professional enough over there to do that. Would I hold my money there instead of just hit spot Bitcoin? No, but I but personally, just looking at the situation objectively, I think the team there is smart enough to understand the dynamics here. But if you got to that point, you would just have to come out in front and say, listen, we're going to continue to pay the coupon on this. We have so much more Bitcoin than our
Right.
total debt. We're incredibly well capitalized. We're incredibly well collateralized, but we are going to sell off pieces, through a protracted bear market where the CAGR is not commensurate above the coupon rate, and that's just what we're going to do. And we have, I think at this point they would probably have like 200 years
Right.
of runway, on that. And so I think you just have to come out and say, we can withstand this storm for decades if need be, and here's the plan, and just alert everyone to it, as opposed to just trying to say nothing and start liquidating Bitcoin and paying people back, and scrambling everyone in the markets trying to figure out what the
Maybe
hell's
just
going on.
having that as an option allows them to never have to use it. You touched on something there that I think applies to a lot of the work that both of us are doing, talking to business owners. Um, and I mentioned it at the outset, this sort of distraction along the hero's journey as a Bitcoin business owner, as a Bitcoiner owner of a business. That the side quest, I want to become a Bitcoin treasury company, and the distraction that comes with it. You mentioned, MicroStrategy has a valuable sort of piece of the puzzle, which is a cash flowing operating company. Now, MicroStrategy has a massive sort of balance sheet operation at this point that kind of dwarfs the operating company. But if you rewind to when they got started, they had a business that made money first, right, and of a scale and access to the public markets that allowed them to start this. And originally, remember, it was very nominal raises and piling cash flows into Bitcoin, building a war chest. 5 years later, he's got a pretty massive stack and can do these other sort of exotic things. And so I'm curious if you experience this talking with business owners, because I certainly do, where they're saying, "Well, I want to do that too." And the first question is, well, what is the business that's going to support kind of step one, stage one, which is stacking Bitcoin with the cash flows? And I think this trade has attracted folks who have businesses that aren't really in that position, because Saylor has talked a lot about, oh, well, our business was kind of sideways, zombie, whatever, wasn't going anywhere, but it was making money. And I'm curious, I spend a decent amount of time sort of talking that through with business owners, saying, hey, no, like, what we should be focused on in the private markets is first generating profits, piling those profits into Bitcoin. Then we can evaluate the menu of capital markets transactions. Um, but maybe in your world, they're not coming to you until they have some cash flows to stack with, because they know that that's what they will need your help with, from a business perspective.
Well, it's funny you mentioned that, because if you remember too, Strategy's initial Sailor's initial dilemma was, I have like
Mm.
half a
Hmm.
billion dollars of cash on my balance sheet because I am profitable, but the cash is melting. What do I do? And that's really, then 5 years later, or 4 years later now, it's all this financial he's creating like a
Right.
Bitcoin yield curve almost, and he's sort of his own sovereign, issuing different debt instruments and equity instruments, and it's all interesting. I kind of find it uh I don't find it that exciting. It's a little I like the businesses that are making something cool, that are making money, and then had Strategy's initial
Right.
problem
Exactly.
of, we're making money, we're putting it on the balance sheet, but it's just constantly being eroded. And it's like, I can only buy so many machines to grow my business, or I can only hire so many more salespeople to go find new markets. And it's like, Saylor solved his initial problem of being a profitable business, storing his savings in an inferior currency, with just putting Bitcoin on the balance sheet. And for 99% of businesses, I think that's
Right.
what they should be doing. That it should kind of just end there. Like, you're a profitable business, you're storing your time and energy in a currency that's being debased. You can't store your time and energy in that. You know that. And now here's the solution for you. And you don't need to access the capital markets and, build out a yield curve and blah blah blah. But most people forget too that strategy was in a pretty precarious situation in 22. I don't want to say they were a 3% move away from being
Very close.
liquidated, but things got a little hairy. Things got a little hairy for them, and if we had dipped under like 10K, which was not out of the question. I mean, there were many people I remember at 16K where, we're going under 10K, we're going lower. And so it wasn't, obviously they were wrong and that proved out, but that wasn't off the table as an option at that time. And they would have been in some trouble implementing their strategy of what they had been doing. So, there was a little luck involved for them too. And you don't ever want to be in that situation as a business where you need markets to break
Hmm.
your way, or you're really getting close to the cushion you built yourself, um, and things are out of your control. That you're at a point where you could get liquidated and you have no say in it. Like there's no, you can't undo the debt. You can't get more capital onto your balance sheet. You can't go raise, and you're just kind of at the whims of the market. And strategy was in that position. They were at the whims of the market, and fortunately for them, they made it through, and now they're a juggernaut. And I don't think they'll ever be close to that situation again. But they did put them in a situation where things could have broke the wrong way for them, and that's another thing. As professionals in this space, as you go forward with your business and we're at our business, is we just need to be um, very cognizant of the fact when we're advising businesses on these strategies and what to be doing, that there's a very real risk in taking on debt and taking on too much debt.
Yeah,
So,
absolutely. That's why I feel like the piece of the financial engineering that to me feels safe enough to explore as a private markets purchase is this direct lender kind of cash flow lending with a open-minded lender that says, sure, you can use the proceeds to buy Bitcoin, put it on the balance sheet. That's better than the dividend recap I was going to fund and purchase an airplane or a yacht for the owner. Um, and I think that's an interesting trade. I think it's not going to be cheap. It'll probably be double-digit interest rates, but 1% amortization gives you incredible flexibility. So, a lot of these private businesses, I'm sure you see this too, the only debt they have is from a bank. And it's, at the scale where if the loan is 7 years, the amortization is 7 years, which means that every year, 1/7 of the principal is due, as well as interest on the loan. In the sort of high finance world of private credit and direct lenders, the interest rate might be higher, but the amortization might be 1%, meaning that only 1% of the principal is due every. And so if you look at like the all-in cash flow impact to a 7-year amortization, 7% interest loan versus a 12% interest, 1% amortization direct lender loan, it's actually lower cash flow impact in that sort of higher interest rate product. And to the non-Bitcoin anointed, you say, well, why the heck would I pay more interest, even if it means less cash flow, or even if it means more cash flow today? But to the Bitcoiner, you're taking this trade because Bitcoin grows at 40 to 60% CAGR. And a meaningful portion of the success of that trade is if you can manage your cash. Like you said, like Saylor had to very carefully manage cash through that last bear market. And so I think it'll be interesting to see when folks kind of wake up to that and say, well, okay, I can kind of abandon bank debt and it's very conservative and like low total leverage, and I can take on kind of direct lender debt, lower amortization, higher interest, all in a lower cash flow burden. Yes, I have this larger obligation at the end of the maturity. But if you can take a 5 or 7 year note like that against a business that you have high conviction in, uh, boy, it's an interesting trade. It's a way to take on debt to accumulate Bitcoin without having to sell your business. Maybe say I'm not ready to sort of be that kind of. I don't want to step away. I want to continue to grow my business, but I'd like to do it with the whole purpose being to accumulate Bitcoin. Well, maybe I do that with some direct lender debt in the meantime. We'll see how it plays out.
Yeah, and you also need to make sure that you get through full term, so you don't get liquidated, or you just take on such a low amount that it doesn't matter, relative to the value of your business, or if you just take the debt on versus the value of your business, and then buy Bitcoin with that, and you can keep the equity in the business, and your loan doesn't get called, and you don't even have a covenant or anything tied to the
Right.
Bitcoin at all in the loan
If the
documents.
lenders
Yeah,
want
yeah,
security on the Bitcoin specifically, then they better be ready to offer better terms than a traditional refinance. Because the argument would be, hey, you were going to underwrite this as a dividend recap and buy the owner a yacht. If the Bitcoin stays in the balance sheet, the term should not be the exact same as the sort of cash out refi, because this is a net better credit for you as the lender. And so I think the lenders are going to have to decide, and this is where you need good advice. This is where Capital B advisory comes in. Is you need someone to argue with the lender on behalf of the issuer, saying, look, if you're going to underwrite this the same as a dividend recap, then you don't get title on the Bitcoin. But if you want title on the Bitcoin, well, then give us another turn of leverage, and another 1x EBITDA, and now you've got security in the Bitcoin, and then it starts to take shape and look a little bit like what Andrew Hones is doing with battery on the real estate side, which is okay. This asset could have taken $10 million of leverage on its own in real estate, but with a couple $1,000,000 of Bitcoin, we can now do a $12 million facility. Same concept might be happening in the business space for sort of direct lending, but yeah, I'm excited to negotiate the first one of these. Like, I don't think this trade has really ever happened. It might have happened once or twice on the fringes, but I've never really heard about it or read about it. And I'm convinced there are enough lenders out there now that would entertain it. And my mission at Capital B is to find the borrowers that want to explore that trade.
it's funny you say that Andrew Hones deal. I actually brought that to the institution I worked at right before I left in 2024, and we were very close to figuring something out, and someone in the institution just torpedoed the whole thing at the last minute. And my selling point was just underwrite
Right.
the Bitcoin to
Yeah.
zero. Would you do this real estate loan? And if so, we won't even, to your point, we can figure out title the Bitcoin, holding the Bitcoin, how just underwrite it to the real estate, and it makes sense. And then the Bitcoin will just be a bonus, but underwrite it to zero,
Yeah.
and we'll go from there. And so now that this concept, I talked to Andrew. I was out at the Financial Services Summit out in Denver, which was a great conference. But I talked to Andrew, and he was telling me, he's like, I have $7 billion of interest in
Wow.
this product, and so I think you're going to get some opportunity. That's just on the real
Yeah.
estate side. I think you're going to get some opportunities to go talk to these lenders, but it really is about you know having them be educated, having them understand that, yeah, okay, if we recapitalize this credit structure um, with Bitcoin, that it's an infinitely better deal for me, and I could effectively underwrite it to zero if I wanted, and here's the terms I would give you, and then you can share in the upside. I mean, it's it's just so obvious. It's just such a no brainer. For these lenders to do these deals. It's just like, when are they going to wake up to this reality? I don't know.
I'm very much rooting for Andrew and team to raise as big a fund as possible and go do a zillion of these, because it'll be such good marketing to the fixed income and just the debt, the institutional allocator and executor of anything, debt or debt like. I feel like this will have such far-reaching kind of marketing power for Bitcoin as not just this sort of internet drug money, but actually a really useful type of collateral that improves basically every type of thing it touches, whether it's sitting on the balance sheet of a business or it's sitting as a part of the collateral package in a loan. It has incredibly unique properties, and I view the inevitable success of Battery and their strategy as a huge marketing push to TradFi on behalf of Bitcoin.
Yeah, I personally, I think it's just going to completely change the lending markets as lenders start to figure this out. I mean, previously it's okay, you're just a lender, you don't get in the capital stack, and you just lend at 5%. But like, what if you could do a JV and share in the upside? It's like, well, me as a borrower, I may, to your what you were talking about earlier, I may want to go to a lending source that has a higher interest rate than the banks because I can add Bitcoin to my
Yep.
credit facility. Um, and now all of a sudden, are the banks going to be like, well, we're just going to keep lending at 4.5%, and not including Bitcoin in these lending structures? And
Well, the Bitcoin collateral makes you more
I mean
competitive as a
that
lender
yeah,
because so if you talk, you can offer a
exactly.
cheaper interest rate
Yes.
because you've got another
Yeah.
source of repayment.
And then it's going to be a race to the bottom, right? Of how little do we have to share in your upside with you to get your business so we can get the loan out there? Then you're back to the problem of, okay, we're still getting, beat by inflation. But I mean, it's just a crazy dynamic to think about, because I mean, you could have an entire cottage industry of basically private money coming in because they get the coupon rate plus the Bitcoin when they make the loan, and then competition with the banks who are printing the money out of thin air. They don't actually have the capital to lend in, and I'm not sure how all of this is going to work out, but it's going to completely reshape the lending landscape that currently
I
exists today. That's
wonder
for
if
sure.
this is how Andrew got to the bit bonds idea, which was, shoot, part of the problem I'm running into is I don't have reference parameters to point the um, interested parties to, right? Because if I'm a lender and I'm explaining to a would be borrower how I calculated my proposed interest rate, it's SOFR plus whatever, it's the risk free rate plus a risk premium, right? There's academic sort of math to it. And I wonder if in trying to construct that deal for the real estate collateral in Philadelphia, Andrew was like, "There's no market for this as far as like what should I refer to as far as what's the upside split, what's the proportion of proceeds going to Bitcoin, how is it tied up, how do we release them from the loan in case they refinance the real estate piece of it." And I wonder if that is what sort of kept him up at night. And then he said, "Okay, well, I need to propose a Bitbonds concept, or first ideate it and then propose it, because this would then develop a very robust and deeply traded market that would give you all the sort of information you needed from a private markets perspective to have reference parameters for what is the collateral portion that is Bitcoin, what is the upside split, what is the sort of discount to the interest rate that comes with having this better collateral in the package." So I'd be curious. I'll try and ask him at some point if that was how he got to that sort of other idea, which is a much bigger one, I think, just from the sort of total addressable market to sort of add Bitcoin as collateral to treasury bonds for every sovereign nation in the world. It's a really interesting concept.
Yeah, it's almost like creating lending
Yep.
KPIs. Yeah. Uh, yeah. I mean, I don't know. To me, it's all fascinating. None of us obviously know what the future holds, but it's just gonna play. I just things are gonna get so crazy, and then obviously you have the scarcity issue, which is everyone's gonna be scrambling to um you know it- there's listen, as businesses grow, as accounts receivable are created, as inventories grow, as production increases, as we have more goods, as there's more things to lend against, um there's more things to borrow against, and that's human productivity. But you can't human productivity this pool of Bitcoin, and as as lenders and uh, people try to chase that infinitely scarce asset by trying by trying to create dollars out of thin air to get into these credit facilities. It's just, to me, it's kind of mind blowing what as we have this transition from fiat to a Bitcoin standard, like this interim period is, I think it's just gonna be
You're
total
totally
madness.
right, and you and I have talked about this offline, but there's two types of Bitcoin treasury companies. One being companies that use Bitcoin as a treasury asset. That's the types of businesses you and I are both focused on. The other is sort of financial alchemy to turn not very much value into quite a bit of Bitcoin value. I think the first bucket there is sort of here to stay, and the growth that accumulates to Bitcoin purchasing power kind of grows and accumulates to the businesses and individuals that adopt it as a treasury asset in an even more powerful way. And the other side of that, the treasury company stuff, somewhat in large part a distraction. And when you fast forward, a cycle from now, I think that folks who focused on stacking Bitcoin with profitable companies and individuals who did the same will find themselves on better footing than the sort of chasing the current shiny thing that is the alchemy of Bitcoin treasury companies. And so, yeah, I'm excited to work with those businesses, and I think Sovereign is doing an awesome job in that regard. And I hope that between you guys and Capital B Advisory and the probably dozen other sort of financial services providers that were out in Denver at the summit recently, I hope we can build a really full suite of services that we can all be proud of to serve the Bitcoin business community.
Yeah, I mean, it's all out there. It's all coming. I know I told the story on here before, but we had someone come to us who basically wanted to become a Bitcoin treasury company. They had a very nice Bitcoin reserve on their balance sheet, and we, kindly advised them against doing that. I mean, we said you have a great business. You've been successful. Just keep doing what you're doing. Keep putting your profits into Bitcoin. You don't need, and this was the height of Bitcoin treasury company madness, kind of like May, June timeframe. And uh, honestly, we certainly didn't have the customer list and client list that we do today, and it was kind of tempting to be like, hey, this would be a nice opportunity, but we're like, no, this is going to look bad. Like, it's not worth the short term gain to try to um, bring a company into to something that, frankly, we don't really have the expertise in. A, number one, and then B, number two, we think is a bad idea for a business in general. Um, to sort of try to go play all these financial alchemy games when you have a underlying profitable business where you've been stacking Bitcoin and you can just keep stacking Bitcoin. We just don't really see the point in doing that. That's not going to benefit you in the long run. And to your point uh, about being excited about the space and the financial professionals and other things like that. We had a panel about this out in Denver. Not, I say we, like I had something to do with it. The Jordan and Wyatt, who organized the summit out there, had a panel about sort of our ethical responsibility as financial professionals in this space, and that we have, because of the knowledge we have, because of many of us, because of the situation that we found ourselves in, that we have an obligation to correctly steer people, to ethically steer people, that they're and this is why we hate the shitcoiners. This is why we hate all the meme coins and everything else, is because, I mean, these are scams and you're stealing from people. You're no different than the guy that called my grandpa in
Oh,
10 years ago and told him I was in a Peruvian prison and needed to Western Union him some money to bail me out. And like, you're no different than that. You're just doing it digitally on a much grander scale, and you're the same con man, the same bad actor, and it is our responsibility to shepherd people through these times and do it ethically and do it morally and make sure we aren't abusing people and their trust and their money. And that's we owe
I
that to
think
everybody as well.
it's not a perfectly applicable saying, but I'll translate it. It's the wheels of justice grind slow, but exceedingly fine. I think applying that to our sort of duty as Bitcoiners, you know, it takes a cycle or two for folks that you've been recommending avoid altcoins to come back to you and say, "Hey, thank you for helping me avoid that mistake." And for all of us, there's a cohort of folks, friends and family, that don't listen to that advice and come back to you later and admit losses or just never touch the whole space again because they're so burnt by it. But the same concept in our sort of advice in professional sort of business services right now. The temptation to chase the treasury company shiny thing uh, is important to square with the obligation that you should feel towards your clients, that you've given them good advice that lasts through Bitcoin cycles. Um, because I think that will be much more valuable for building the long term kind of intrinsic value of an enterprise like Sovereign or Capital B Advisory, it, versus making maybe making a fee in the near term for helping someone evaluate the treasury company distraction. And then if you think about, if you're building clients for the long term, like, you want your clients to be as big as possible. And the way to get as big as possible is to start accumulating Bitcoin as aggressively as possible and holding it for the long term in safe, reasonable custody. Um, and that work is what's the meme? It ain't much, but it's honest work.
Yes,
Yeah.
it's an honest day's work. You know, I mean, we're already seeing the problem with these Bitcoin treasury companies now. Like, Bitcoin is basically chopped around for a year. Like, we haven't moved in a year.
It's
There's been
maddening,
some,
isn't it?
like the range. Uh, I mean, I've been around long enough. It's like I also know what the end of this is. I mean, I know they're gonna turn on the money printer bazooka here at some point, and a lot of people will have gotten shaken out in the last year because it was boring and didn't move. But like, we all know how this ends. Nothing's changed from first principles. Principles. They got to print ever more money, and then the next print's going to be bigger than the one before, and if they make it to another print after that, it'll be bigger than the next one. So we all know how this goes. We all know that Bitcoin works in exponentials, and um, we just haven't gotten to the massive liquidity event yet. But along those lines, um, uh, these treasury companies are they're struggling to go tap these capital markets. One, because the liquidity is not out there. The liquidity hasn't hit yet, so they don't. There's not all this capital sloshing around available to them to go get the money. And two, when Bitcoin's CAGR is underperforming the level of your debt, I think we're up like 12% this year or something. Year to date, something like that. Like, you're starting to get into a position, and I saw some of these companies presentations and stuff. They literally have the word flywheel on there, and it's like, well, a flywheel only works as long as it's going on. Like, FTX said he was running a flywheel as well. Like, flywheel scam, or I don't want to say scams, flywheel structures do not work when the price is coming down. And it's like, we haven't even got to the price going
Right.
down part yet. We haven't had the 60% drop, the 50% drop. You know, we're just at stagnation, and these companies are already basically dead in the water. And so, like, this is it, it's just going to be even more carnage when we have I still think we're going to have a huge run up, and then we're going to have a huge drawdown. And then when that drawdown comes, we're going to, uh, we're going to see a lot of these bodies floating to the surface. And so, like, we're already seeing it now in a slightly up year. These companies struggling to raise any capital and keep the quote unquote flywheel going. So it's almost like already a failed experiment.
I think there's still
Like, it
an
doesn't
eighth or
work
a
really.
ninth inning. To your point, I agree. I think the odds that the bull market hasn't started are much higher than the odds that the bull market is over. And so I think there's an eighth or a ninth inning of the Bitcoin Treasury Company success phase or perceived success phase. Because I agree. I think odds that we go much higher, much sooner from here are likely, and I think those Bitcoin Treasury companies are just levered Bitcoin equity, so they'll trade even higher, and then they'll trade even lower. And I agree. I think people have talked a lot about the
Yes.
cycle, the Bitcoin cycle being over, but I don't really understand where that's coming from. I mean, it's October, it's Halloween, it's October 31st. But by the time this comes out, maybe it'll be a day or two later. But
It's coming
okay,
out on Monday, so this is like the first one that will be
so it's
released pretty quickly.
we're
So
in early
yeah,
November. I'm talking to those of you in the future. We're in early November of 2025. If you rewind to 8 years, early November of 2017, like the year of 2025 has behaved like the year of 2017, eerily similar. Most of the year of 2017, we were range bound at like $1,000 to $1,100 per Bitcoin. Now just add two zeros to that, and the same thing is happening. And I think lots of folks know, even if they weren't in Bitcoin at the time, that we ended that year or started the following year at like $18,000 per Bitcoin, right? A an 18x in less than 12 months or 15x in less than 12 months. Now, will that repeat? I'm not sure, but my point is just that it still feels very similar to that versus this idea that the cycles are over or that Bitcoin's cycles are going to flatten out. And I hold that partly because, yeah, institutions are much more involved now, but institutions are made up of people, and people are the same, and people behave the same as groups as they do as individuals. And the individuals bid this thing up to 18 grand and then crash it back down to three. And the individuals will do the same sort of, or the institutions run by individuals will do the same thing for cycles to come. But it'll be fun and interesting to watch play out. I think lots of folks expected it to happen sooner. But my base case was always kind of this year was going to confuse some people until Q4. So should be a fun holiday season.
well, I mean, I think to that point, really, I'm just kind of trying to highlight the fact that even when those if the eighth and ninth inning, if and when those do come, we're still going to have
Yeah,
some drawdown period, and that even at a sort of slight up, the
right,
plan's not working. So how much is it going to not work when we actually have
right.
a red period again? And that's the thing. It's what we've been talking about this whole time, and maybe this is a good note to wrap on. But like, have a sustainable business, provide value to the world, store the value that you've created, store your time and energy in a better money, and there's some other tools. And as we transition from Bitcoin to, or excuse me, from fiat to Bitcoin, um, there's options out there to access the system, to lever the system, and you're going to need some help along the way, and you should take advantage of people that have done this, that have high ethics, that are in this space, that um, aren't trying to rip a one-time fee from you and call it a day. It's I always say that um, I'm hoping our customers thank us 5 years from now. That's the goal, is to have a 5 year relationship, a 10-year relationship with these businesses, where they look back and they say, man, thank God we started with you in 2025. Thank God we started with you in 2026. That's the value you added to my business. And there's absolutely no way that's going to be possible by um, steering people into bad decisions, getting them over levered, giving them bad advice, and not sticking to what you know to be good financial decisions and helping these people. And so it is on us as professionals to make sure that's the case. And I'm excited for the opportunity too, because we're going to really have an opportunity to stand out as people that steered people the right way, and that were the sort of shining light on the hill that guided people correctly. And we have a chance to not only stand out against all the crypto bros and all the scammers and con artists, but really, current TradFi and current Wall Street and all these people, to say, how come none of you told me about this? Why were you trying to grind out, 4% in my portfolio, so I only got debased by like 3% when they printed all the money. Like we really have a chance to separate ourselves from everybody, from this entire industry, the entire TradFi industry. And if we do it correctly, we'll be remembered and thanked for a very long time, and that should be
There
everyone's
are
goal.
so few Bitcoiners in finance. Couldn't agree more. Well said. Excited to be applying time, capital, and reputation, as Rod Rowdy says, to the Bitcoin space. And yeah, maybe we'll. I hope that sometime from now we have a client who loves the publicity and wants to come on and talk about how Sovereign showed them the way on building a Bitcoin treasury and securing it in a sound way, and then Capital B Advisory helped them through whatever capital markets event they were navigating, and then that'd be a fun kind of reason to come back together and talk about our businesses again.
I would love to have that. I would love to do a podcast, and we're working on. We're going to have our first couple customers that are willing to come on, and we're going
Awesome.
to start talking to them as well. So hopefully, as we go forward, we'll have more and more on, and then to the extent that we work with other people in this space that also help them out, because really that's a huge part of the value add at Sovereign too, is just being able to network these companies. I mean, so many people have, okay, I need to do
Right.
this. Where do I go? I need to, okay, I want to set up employee benefits. How do I do that? Or, okay, I need someone to advise me um, on prepping this business for a sale. Or I need someone to advise me on lending. Where do I go for that? Or
Hmm.
excuse me, borrowing rather. Or even lending. That might be another option too that these Bitcoin companies have down. Like, okay, we don't really have anywhere to deploy your capital. Do you want to go out on the risk curve and lend some of it out, as opposed to just sitting on it? And that's a whole different conversation and a whole different um, you know appetite of risk and that sort of thing. But the possibilities are endless, and steering people to others in this space that are going to help them, and know are going to help them the right way is that's a huge part of what gets me excited and gets me up in the morning too. So
Absolutely.
all right, awesome, Scott. Great talking to you as always. Where should people go for yourself and for Capital B if they
So
want to
yeah,
check it
absolutely.
out?
Thank you for having me. Great conversation. I am on LinkedIn, capitalbadvisory.com. There's a business webpage, and then also my personal LinkedIn, Scott Marmoll. And then if you're on Nostr, primal.net/suitcoiner. Um, and I think that's it. Other than that, you gotta find me the old-fashioned way. Come to Bitcoin Charlotte. We have social meetups every Saturday and a technical workshop once a month on Monday nights.
So, Scott, appreciate your work as always. We're Sovereign. I'm Plebe Anon on Master. And I was told by our podcast producer here that I'm supposed to say, if you like the show, please subscribe. Please like the show. We promise we won't put any open mouth thumbnails or anything like that to cheat the algorithm. But if you actually feel like you're getting some value for value, we are on Fountain, so feel free to boost us there if you enjoy the episodes. But really, just become a subscriber and tune in, and also interact with us on Fountain too. I read all the comments, and I run the Sovereign Nostr account as well. If you want to find us on there, and love interacting with people that listen to the show, and business owners as well. I mean, we've sourced a significant amount of our guests from Nostr directly. Nostr seems to be the best place for small businesses selling their wares directly for Bitcoin. So a great jumping off point. Appreciate everyone, and we will talk to you next time. Thanks.